Martin. Good morning, everyone. I am Katrina Martin. I am here to talk to you about taxes, and Tina's going to talk to you about home ownership and purchasing a home. A little bit about me. A little bit about me is my own wild tax and advisory service based out of Michigan, but I represent clients nationwide. I'm an enrolled agent, meaning that I can represent you with the IRS. If you have any tax questions or bills or anything like that, you need representation, then I can help you with that. I specialize in tax strategy, tax preparation, and representation. Glad you guys made it today. This is really important. This is an important topic because this is home ownership and taxes we call this a match made by the IRS because those two things definitely go hand in hand. And one of the things that we wanted to focus on with you all today is how to become a homeowner. You know, that's the American dream because it allows you a lot of freedoms and it allows you to put money back in your pocket. It is one of the top tax saving solutions that's available to you. As a homeowner, you do have the ability, even as not for, especially if you're a W-2 employee, home ownership is the one area where you can actually reduce your tax liability and reduce your taxes because you get to write some things off. So when you file your taxes and you have a W-2 and you own a home, you can write off the interest that you paid for the home, the property taxes that you paid for the home, any points that you paid. So for example, Tina may talk about points on mortgages. If you buy those down, you can actually buy those down and you can actually write that off as well. And if you have PMI insurance, those you can actually write that stuff off. So it's important to know that the benefits of home ownership transcends to your taxes. So that's the after effect of actually having a home. Let's talk about before, how that plays out with taxes. In order to qualify for a home purchase, you have to have 2 years of tax returns. That's the first qualifier to determine how much of a home you can purchase. Because just because you see a $500,000 home doesn't mean that you can actually qualify for that. It's based upon your income and your debt. So your income has to be at a certain place where you can actually afford the home. But how they determine that is your last 2 years of tax returns. So you have to be up to date on your taxes. Not only do you have to submit your taxes to the mortgage company the last 2 years, but they also have you fill out a form 4506T, which is the transcript request form, where they actually submit that to the IRS and pull your transcripts to make sure that what you provided them matches what you actually provided to the IRS as well. So your taxes are the first step in actually entering home ownership. And if you're behind on your taxes, please reach out. I'm going to put my link in the chat section, my information in the chat section, so you can reach out and we can help get you back on track. The other thing I want to talk about is that income that we talked about that's reported on your tax return. So if you're a W-2 employee, meaning that you work for an employer, that information comes directly off of your W-2. So that income gets reported on your taxes. So that's what they use to determine how much of a home you can afford. When you're self-employed, you provide that income. What happens a lot of times with self-employed people is you don't want to pay a lot of taxes when you're filing. So you may underreport your income, not apply all the income that you had. Let me tell you how that hurts you. You can only buy a property based upon your income. If you're underreporting, you can't qualify for the home that you most likely want and most likely can't afford. But the thing is, you have to make sure that you're reporting all of your income, especially if your goal is to purchase a home within a certain time frame. You have to think about what those last 2 years of tax returns look like, because you don't want to end up having to sacrifice your dream home because you didn't report all of your income and you actually can't qualify for it. You just need to pull that information in. And if you've done that in the past, what we can do is you can amend your returns. If there's information that you miss and that you need to want to go report now, you can actually do that. And that hurt a lot of self-employed people in a lot of ways, not only with home ownership, but actually qualifying for finance. And a lot of people couldn't get the type of financing they wanted with EIDL and PPP loans because they didn't report all of their income. So if you're self-employed, making sure you report all your income, because that income is going to be used to determine what type of home you can actually qualify for. And if you're a W-2 employee, making sure that you file your taxes every year on time. And if you haven't, reach out and we'll get you caught up. It's not a done deal. We'll make sure that you get on the right path. And I'm going to turn this over to Tina to talk to you about how to enter that home buying process. Thank you.
Thank you so much, Katrina. I'm Tina McNeal O'Brien, and I am the broker of the McNeal O'Brien team real estate in Oak Park, Michigan. I just wanted to talk a little bit about this match between taxes and home ownership. This is one of the last bastions of deductions that the IRS has left for folks to be able to take. There is so much that you can do in your home once you own a home to make sure that you get those tax credits. And that includes new furnaces, new hot water tanks, other energy saving things that you might do in a home, like add windows, or a new garage door can even qualify for taxes in there. One of the things that I tell people all of the time is, if you go to what I call a box store, the H&R Blocks, the Jackson Hewitts, those people take a one-day course to do your taxes. They are not a professional like Katrina who knows what questions to ask in order to make sure that you maximize your deductions. So going to her as a tax professional is paramount to you getting to that place where once you might not have gotten a return to being able to get a return or to get your overpayment back from the government. That overpayment allows the government to use your funds for whatever they'd like to for the time frame until they pay it back to you, and you give them an interest-free loan during that time frame. So it becomes really important to, first of all, understand your tax structure, whether you're a W-2 or a 1099 employee, excuse me, and to also know that these programs are not only for first-time home buyers, but say that you already own a home and now you'd like to get an investment property to use as either a rental or an Airbnb, you can do that with your income tax refund overpayment. So the first thing that you would have to do is, one, file your taxes. We need to kind of know what you're working with out there in the either how much you're going to get in an overpayment, or if you're not going to get an overpayment, exactly what your income is to be able to move forward. The second step is to get a pre-approval with a mortgage loan originator, which I can help you kind of steer you in the right direction of depending on the programs. But really what I'd like to talk about today are those programs that are out there. So there are some programs that I call down payment assistance programs that allow you to get in anywhere between 1% and 3.5% for your down payment. So also the great thing about those programs is that they allow you to be gifted those funds as well, which means a family member, a significant other, a spouse can gift you those funds to help you with your down payment and your closing cost. So those things become really important for us to really do that due diligence in filing your taxes to know where you will be able to go and where you will be able to perform. There is a program through Michigan, and it's called the MISHTA program, which allows you to put down either a 1% or a 3.5%. They have an FHA product, which is a sponsored product through the federal government. They also have a conventional product, which is a conventional mortgage, follows the conventional underwriting practices. In that, the great thing about the MISHTA program is depending on where you purchase in Michigan, they will assist you with closing costs and down payment costs up to, depending on the area, $10,000. And so that's a great deal of money, depending on the house, the location, and your qualifications to do that. The other great part about the MISHDA program is that it is not so credit hardcore. It is a program that works in Michigan, but other states do have the same program, which understands that not everybody has perfect 800 credit scores, and that there have been some, bumps and bruises in your credit past. So the great thing about that is that there are programs that will allow you to qualify in the 500s and use these programs and maximize those refunds. There's also, of course, straight conventional, which is about 3%, all the way up to 20% down for a property as well. We also have a VA loan, and this is a loan that is for veterans that allows them to get into a home with 0 down payment. They still have to have their closing cost in reserves, but that can also be gifted to them as well. And it is a benefit that we found back in the 40s and 50s when GIs returned from war but could not purchase property because they didn't have a credit history and other down payment because they've been overseas maybe 2 to 3 years. What type of down payment do you have at that time when you just came back and just got into the workforce? And also there is a loan that is called a reverse mortgage. Reverse mortgages are for our seniors that are 65 plus, that allows them to use the equity that's in their home to do what we call age in place. And we've all had that parent, that aunt, that uncle that say, you know what, you're taking me out of my house over my dead body, but it might need repairs. It might need upgrades for handrails and maybe widening of doors for wheelchairs and walkers. And the reverse mortgage allows them to do that. The other thing that the reverse mortgage allows them to do, which most people do not know, say that your aunt and uncle live in a property right now and it is a 2-story property, a colonial. I live in a colonial right now, and there are some mornings that climbing those 17 steps is very daunting. So you can imagine at 65, if you're living in a colonial, that might be a lot. There is a reverse mortgage that will allow purchases. So if they want to get into a condo that is a ranch style condo where everything is on one floor, reverse mortgages will allow them to use the equity from their property and put them into a new loan in a new home. And the qualifications are way less because they do not have to make payments during the time frame that they are still living in that property. So there are a lot of options out there to work with whatever money that you get back as a tax rebate. And that makes home ownership, or if you'd like to buy an investment property, even easier during this time of year. So really my request is, before you go to a big box store to have your taxes done, please make sure that you get in touch with Katrina and have her do your taxes so you can maximize that refund that works the best for your family and your 2022 goals. That is my request.
And I ditto what Tina is saying. I actually just purchased another property, and Tina guided me through that process. And she is a seasoned vet in this real estate business. So if you're looking for someone to get you in your next home, who's patient with you, who understands how to get you in the home, because it's a challenge right now with the market. It's a seller's market. So finding a home, they go like that. And trying to get an offer and make it where your offer stands out without having to break the bank. It takes a seasoned real estate veteran to make that possible for you. And Tina McNeal O'Brien is your girl for that. So reach out to her at the McNeal O'Brien team, and we'll have our contact information in the chat and also on our social media pages. I think we're going to do a Q&A session. Is that right, Tina?
Absolutely. So this Q&A is the opportunity to ask two experts all of the questions that you've been dying to ask. So if you're, we run into, I've been doing for the past couple of weeks is just telling people about the scams that are out there on the tax, which then marries into the real estate side of the world. I have heard of income tax refund hostage taking, where they're like, oh yeah, we'll do your taxes and then you can do a rapid loan and then we'll hold that money for you so you can use it as a purchase. That's extortion. That is nothing else more than that. I have heard of people telling others to claim too many dependents on the W-2 so that they'll get back more money during the year and have less in repayment. Mm-hmm. I've heard people who they're like, oh, I did my own taxes online through Inuit, and I'll ask them some questions like, what did you do about the earned income credit that you were given throughout the year? And they're like, what are you talking about? I didn't have to claim that. So knowledge is power. So we're here to answer all of those questions. And then the only bad question is the one that goes unasked. So please just take yourself off mute and ask any questions that you may have.
And and then if everybody's shy, I can pose some questions that I've been recently receiving, and some questions that I know they're kind of in the market space. What's the difference between you and TurboTax? So that's almost like saying, what's the difference between, what's a good analogy for it? What's the difference between pulling my own tooth versus going to a dentist? You can probably yank it, but you may get it out. But there's a precision and an expertise that goes with going to somebody who specializes in that expertise. And also, TurboTax is a system, it's a tool. So we actually use software as well. And a lot of times people compare that, like you're using software as well. I'm using, and my firm's using software with the knowledge behind it, understanding that if I plug a number in, what this impacts, and being able to understand what actually applies to what credits are available to you, what's the perfect question to ask to trigger something else. Because even though you're plugging things in, you have to link certain things, and information changes everything on your return. So having the right answers to the right questions makes the difference in your final return. It's not as simple as taking your W-2 and just plugging it in, because garbage in, garbage out, right? So you have to make sure that you're getting the right information in, well-qualified information, because I need to know where your goals are. I need to ask questions like, so sometimes a lot of people have been reaching out saying, hey, I got my W-2, can I file? And I'm like, well, did you also pull out any money out of your retirement fund? Did you get any advanced child tax payments? Did you get a third stimulus payment? All of those things are going to impact all of that stuff has to be applied to this 2021's return. TurboTax isn't going to ask you that. They're going to say, plug what you have in. And if you got any unemployment benefits, I need you to go to unemployment. If they haven't sent you the form, go to the dashboard and download your 1099-G. All of those things are going to impact what your refund is going to be. And here's what happens as well. If you don't have that information when you submit it, the IRS does what's called a matching system. So every form that you receive, they receive. So that's why there's a deadline to have forms out by January 31st, because it has to go to you and it has to go to the IRS. What happens when you file your return, they take the information that you input and match it to what they have. So if you missed a form, it doesn't match what they have in their system. So automatically you get pinged out, delays, until they can send you a letter asking you to match what's in the system. We have information that you haven't reported. So to avoid those delays, I stress, get all your documentation, get all your ducks in a row, and reach out to a professional. I'm all about saving a dollar, but some things you just can't cheap out on, because saving that dollar is going to cost you thousands. So my team is available to help you and answer any questions. And like I said, I've been in this business far longer than I care to admit. This is 20 some years in the game. So I understand taxes from the dark ages to current year. And this year is not the time to try to DIY it. The laws have changed. They've changed midstream. They changed the minute we're about to submit something, and you need somebody that's up on top of that. And this is my passion, and this is where I really go hard for my clients. So feel free to reach out.
So I just like to expound on that a little bit more. In the home ownership world, and TurboTax does ask questions. I will tell you that, but they don't necessarily ask the right questions. And you can only do that. There's so many things that you can automate. And then there's things that you really shouldn't automate, and taxes are one of them. And I'm not saying that TurboTax is not a great program for people like my son could do a TurboTax. He's 15 years old. He has a little itty bitty job. He still lives here with me, but at the same time, I would still have Katrina do those taxes because she's going to ask the questions of, did you have to, buy your uniform? Did you have to pay for any training for your job? Things like that become really important because we're leaving money on the table. And I'm going to tell you one thing the IRS is never going to do is say, oops, you missed that deduction. Oops, you missed that refund opportunity. They will never do that. And so if you're not asking all of the questions, like, did you do any improvements in your home? Did you buy anything in your home? Anything energy efficient, and have that conversation with Katrina, you will not know that you can take your garage door off if it's energy efficient. And you will not know that you can take your portions of your furnace and hot water tank because those went out during the year and you just replaced them. But there are tax advantages. Solar is another huge advantage for a home, as well as underground thermodynamics and other items that you add that you think are, well, I just did this to save money. That can be a tax advantage to you. Also, how you utilize your vehicles. If you're doing any ride shares during this time frame, or if you're working for DoorDash on the side as a little side hustle, those are all tax benefits for you. So they're never going to ask you that on TurboTax.
No. And the thing that you brought up a great point, Tina, about your 15-year-old son. So what happens a lot of times is you'll have young adults, teenagers and young adults who've entered the workforce, and they will go and do their own tax return much faster than their parent because they're only waiting on that one W-2. So still live at home. They're still clearly a dependent. They're not providing the majority of their support, but they'll go file their own return and in turn screw their parent up because if TurboTax isn't going to ask, they'll ask, but most teenagers think they're not dependents, right? So one of the things that will happen is, are you a dependent on anyone else's return? If a teenager that's a dependent does not check that box, or a young adult, let me correct that, a young adult doesn't check that box, when you go to claim them as a dependent on your return, they've already been used they've already filed their return, so they're no longer available to be a dependent. That's a huge impact to a parent's return because the kids are where the credit's at, right? So making sure when I'm working with my clients and they have young adult children entering the workforce, I'm like, send me their information. I do their information at a discount because it's an add-on to the parents, basically, because I want to make sure that it's done right. I want to make sure that you're not going to lose the benefits of having a dependent because they pulled the trigger too fast and you've lost tens of thousands of dollars in credits for them to get back what they've paid in to taxes, which is never more than $100. So making sure that that's where having an expert comes into play, making sure that you're not, like I said, don't step over dollars and missing the $100 and the $1,000 in this instance. So making sure that you qualify all those questions. Those upfront questions matter because what your goals are aligns with what the questions that we ask you, because we want to make sure if I ask the right questions, I can determine what your refund looks like, as opposed to you just plugging some numbers in and getting thinking that what you got is right and praying and hoping that you got it right. You'll know that it's the best that's out there for you.
Another thing is that Katrina taught me recently is that during this time frame of what I call the now normal and coronavirus, they have hired in the IRS more auditors, not more staff to process returns, but more auditors.
Absolutely.
When you get your taxes filed with Katrina, if you get audited, you have a human being who can help you.
Absolutely.
If you make a mistake in TurboTax, you have no one, because really you're saying, I'm expert enough to file and I'm expert enough to kind of go through that process of an audit by myself. They do have an add-on that you can pay, but they don't know you and they don't know what you put in. They can only go on the raw data. So, they say that someone who defends themselves in court is a fool.
Yeah.
Someone who defends himself in an audit, you can glean to that understanding as well, because you just don't know all the laws and more. So
yeah,
it becomes really important to make sure that you are with the professionals who can answer those questions.
Yeah, and let me say and I'm going to say this, and this may be a shot to the industry. All tax preparers are not equal. So you may have a bad taste for some because you've had a bad experience. And let me tell you, because there are some people that pop up during tax season because they got a computer and they start preparing returns. So this is not their business. It's not a career for them. So they may pop up because they see it as fast money, and you get screwed in the end. That's the easiest way to say it. That's not the situation here. I'm an enrolled agent. I take my craft very seriously, so I can represent you with the IRS. The only other people that can do that are tax CPAs and tax attorneys. Enrolled agents, we are designated as the highest tax practitioners in the industry because we have to test for hours for that, and actually have a suitability check with the IRS to make sure that A, we're current with our own tax returns, and B, that we're credible, that the returns that we've prepared in the past have not been fraudulent, that we have actually done our due diligence, and that we've treated our customers with the proper etiquette and with our best advising services. So make sure all things are not created equal. So when you're vetting your tax preparers and your tax, I would rather you do TurboTax as opposed to going to a place and being screwed. So please make sure that you ask the right questions. How long have you been in this business? Can I contact you after tax season? Because if you pop up today and gone tomorrow, what good is that for me if I get a letter in June? So we're year round. We've been in business for a long time. I started in this business in 2002. So like I said, in the dark ages, so well-versed, and I take my profession very seriously. So if you want to work with a professional tax practitioner, my link is in the bio, and I look forward to talking to you all.
Likewise, I could go on with scams for days, Katrina, on ones that I've seen in the homeownership world and ones that I've also seen that incorporate taxes. But if you'd like more information on some of these absolutely funny, but also tragic scams, please don't hesitate to reach out to us. That's all I really have for today. Katrina, is there anything else you'd like to add?
No.
Any other questions? I want to make sure that if we have any questions, we can do that.
Question?
I have a question.
Yes, ma'am.
Yeah, okay. Now what do you do if you have, because everybody can see I do catering. But on my full-time job, I'm also a chef. So I have made, because of COVID and because of the industry, I haven't made too much doing catering. Okay. So and I've made more on my W-2 job than I have catering. Mm-hmm. So how can it's almost like, should I even claim my catering job?
Absolutely. Because your W-2 is just, that's your guaranteed income. So that has to be filed. You're going to get a return form. You're going to get a form for that. Your catering business, you may not have made as much, but that doesn't mean that you haven't been investing in your business. So that doesn't mean that you haven't been still spending money for your business. So even if you made $100 in your catering business, you may have spent $500. So that means you had a loss of $400. You need to take that loss on your tax return. So yes, definitely include your business. And the beauty about doing that is including your business. If there's any funding that you need eventually, you've already solidified yourself as a business owner, and your tax return acts as your validation for that. So if you do want to, if there's additional loans that open up like SBA or PPP, you've got your documentation to prove that, yes, I'm a business owner. And that's where a lot of people got hit at, because in order to qualify for those loans this round, you had to be in business in 2019. The only way you could prove that you were in business in 2019 is if you had filed it on your tax return in 2019. And so don't ever, even if you only made $1 and you spent $2, still file that business, because that's your substantiation of your business. And then also, that's how you start to grow your business. And then you can start to watch your business, you can watch it year over year. And like I said, in order to purchase a home, you need all your income sources. So that's still good. Your W-2 and that self-employed income are going to be combined to help you qualify for that home purchase. So include all income. You want all income, because that's going to help you in more ways than one. And it's the law.
Okay, thank you. Thank you.
You're welcome.
Anyone else have questions before we sign off today? Well, I'd like to thank everyone for taking the time out of their busy Saturday. As business professionals and entrepreneurs, we know how precious Saturdays are, and we appreciate you giving us this time today to make a difference and hopefully get you from not getting a tax return to getting a tax return this year, and making it more beneficial for your family to have that income back into your homes. If you have any questions, once again, I did put my information, Katrina put her information in the chat. And if you have any questions, please don't hesitate to reach out to either one of us. We're more than happy to assist you and to share some knowledge, especially if you're questioning where to go, what to do, and something just doesn't sound right. I would like to tell you, if it doesn't sound right, it probably isn't. And that is the first rule of thumb. Your gut is probably the best thermometer that you have. And if it sounds strange where they're like, yes, you can do this house, but we're not closing with a title company, anything like that. Or even if you have a family member that's doing a rental and they ask for a deposit, you can call a real estate professional and they can look up in public records and see who owns that property and if they have the right to lease that property to that individual. Something very quick, something very simple, but will save you thousands of dollars to get into a fraudulent lease. And there's nothing we can do to recoup that income that you gave to somebody who is not actually the owner, agent, or assigned to that property. And you can be forcibly removed from a home that you do not have a correct and valid lease for. So little information like that, please don't hesitate to reach out. Once again, thank you for being here.
Thank you.
Thank you, everyone. Have a perfect day and enjoy.
Great weekend. Bye, everyone.